When I first started trading options, I made a lot of rookie mistakes, the kind that cost you money before you even realize what happened. But over time, I figured out a few lessons that completely changed the way I trade. And I'm going to share those with you here today. 3 beginner lessons that every options trader needs to know. Each one built on the last, and the third one ended up being the single biggest turning point in my trading career. So definitely stick around to hear about that one. Problem number 1. Have you ever entered an options trade and the second your trade fills, you look at your platform and it says you're already down $50? And of course, the wider the bid-ask spread on that symbol, the larger that instant loss can be. I made that mistake a few times when I was starting out. I picked some rinky-dink penny stock to trade options on because I figured it would be a low-risk way to learn, only to find out that when you trade something that's not liquid and it has a wide bid-ask spread, you're instantly going to be down money right out of the gate. So what did I learn from that lesson? Only trade highly liquid symbols with active options chains. Once I started doing that, everything changed. I realized I could trade options on stocks with much higher prices if the options were in fact liquid, and I'd suffer little to no slippage. If I needed out for any reason, I could exit instantly because there were thousands of buyers lined up within pennies of the current price. That gave me the ability to focus on learning strategy and risk management instead of trying to fight executions and slippage. And it actually lowered my potential risk compared to those liquid low-price stocks with wide spreads. Problem number 2, if you tell most people you're going to trade options, what's the first thing you usually hear? I know I heard it from family members, financial advisors, even some day traders. Oh man, options are really risky. Don't go there. Well, I was undeterred. I wanted to dig deeper. And when I did, guess what I found? Yes, there is one type of options trade that can be extremely risky if done wrong. But most options trades, when structured correctly, actually have defined risk, and you can define that risk pretty much as small as you want. Here's an example. Say I own 100 shares of a $100 stock, and I place a stop loss at $97.50. I think my risk is $250, but I'm sure most of you know what happens if that stock gaps down to maybe $80 overnight. I just lost $2,000. With an options trade, once I define my risk, it doesn't matter where the market gaps to or how far it moves up or down. My maximum loss stays exactly the same as when I placed that trade. That realization changed everything for me. I could now structure trades with clearly defined risk that I was comfortable with, unlike stock, and I never had to worry about gapping markets again. Problem number 3, and this one was the biggest breakthrough of my trading career. When I was new, I tried trading every single option strategy under the sun. There's over 30 of them that I can name off the top of my head. Some are for very bullish markets, some for sideways markets, some for bearish or crashing markets, and I wanted to know them all. So I traded them all. And as you can imagine, my results were all over the map. I was lost constantly, chasing consistency and never finding it. Eventually, I got frustrated enough to hire a coach. He looked over my trading history and he said, "Steve, no wonder you're not getting anywhere. You are all over the place. Pick one strategy and stick with it. Master it." He recommended I start with the butterfly trade, which is a slower moving, lower risk structure that forces you to think through the Greeks and trade management processes. So that's exactly what I did. I traded nothing but butterflies for months and months until I knew them inside and out. And guess what happened? My consistency finally improved. I started having profitable months on a much more regular basis. My fear, uncertainty, and doubt, what we call the FUD factor, started to fade away. Over time, as I mastered the butterfly, I started researching other trades that could pair with it. That led me to the diagonal time spread trade. Eventually, I combined the two concepts into what I now call the flagonal. The flagonal trade has become my go-to strategy in almost any market conditions. In the past 6 months alone, I've made 116 live flagonal trades with a 95% win rate and a total return of over 150%. Now, the Flagonal is not a beginner trade, but if you want to see how I built it and how you can master it step by step, be sure to check out this next video.